All right. Well, first of all, welcome everyone. Appreciate everyone joining us this evening. And I'm going to start out by saying a little bit about the HBA and then, of course, introduce Jake, who's going to be the presenter this evening. So the Home Builder Associations are the voice of the construction industry for both home and commercial building and remodeling. Our Metro Denver HBA members perform over 5 billion annually in and around the Metro Denver area. The Metro Denver HBA has been in existence for over 80 years, and our members produce over 1 million homes and add millions of square feet of commercial, retail, and industrial space. Metro Denver HBA is a part of the larger National Association of Home Builders, representing over 140,000 companies and 10 million plus members in the association. You can find more about Metro Denver along with a recording of this whole session at hbadenver.com. And for tonight's presentation, it's going to be hosted by the Marshall Fire Task Force, the Finance and Insurance Subcommittee. We're going to be presenting insurance cash flow insights. Then it's going to be presenting the findings of Jake Harris of BuildWallet and moderated by myself, Casey Bushnell, and I'm with First Bank. So since 2008, Jake has owned and operated national contracting firms specializing in both hotel and residential construction in Raleigh, North Carolina. Recently, Jake saw an opportunity to automate payments and invoices in our new home construction between home builders and subcontractors. And Jake's latest venture is BuildWallet, digital banking platform that allows home builders to construct homes with greater efficiency and transparency, restoring confidence in the home building process. And as a home builder himself, Jake lives in Cary, North Carolina, with his wife and 3 kids. This is going to be a great presentation as we're going to learn about Jake's in-depth research into the cash flow insights of projects using insurance for build and remodeling work. And with that, I'm going to hand it off to Jake.
Awesome. Thank you so much, Casey. So I'm going to go ahead and share my screen so that we can get started on the presentation. So let's get this started. Oops. All right. Everybody see my screen? Good. So setting the groundwork, setting the framework for what this is, I want to start off and I want to kind of kick into an objective. So I'm actually going to move that over there. Perfect. Start off every good thing. So I was asked by the Metro Denver Association from the Home Builder Association to come in and actually put together a special project specifically talking about the cash flow for insurance work. So a number of people that I know over there asked me and said, hey, listen, you're really good with process. You're really good with finance. You're really good with cash flow. Is there a way you'd come over and give us a hand? Because we had heard from previous HBAs that builders were at risk of falling or declaring bankruptcy in other disaster areas because the disaster area work, the rebuild of homes and the renovation of homes and using disaster funds was different than their traditional models. So one of the things that was asked was very early on was, can you come in and write a white paper, create an infographic, do something? And when I got into this, I really kind of realized just how deep the rabbit hole went. So my objective is tonight is simple. I would like to provide a clear cash flow insight and points of consideration for you on what I found. And so I'll give you a disclaimer up front. These are my research findings and opinions only. So I spent time over about 4 months, and I conducted 40 plus industry interviews, insurance companies, bankers, builders, remodelers. I sourced the gathering information and then made my observational theories and hypothesis. Everything is derived and being reported for insight and conversational purposes. Basically, what I found was that everyone handles this a little bit differently. Everybody handles the cash flow of models a little bit differently. So my objective is to provide let's use an ice cream analogy. My objective is to provide the recipe for vanilla ice cream. Understanding that your insurance, your builder, your contractor, somebody may change up the model a little bit. They may add nuts, they may add chocolate, they may add whipped cream, whatever the case is, that's fine. But we're gonna go through and we're gonna provide a base level vanilla model here, and then we're gonna be able to talk about it. So I'm not saying this is how everybody does it, but I'm saying that there's some really good insights in here that kind of describe how things work, and you're gonna you're gonna find it interesting. So on the next screen, hold on. There we go. So first things first, let's talk about the key players. So the primary player in any kind of insurance work is the insurance adjuster. Now, you can also have, if you have an existing mortgage or existing loan on the property of the existing mortgage company or bank, if applicable, there's the homeowner and those are the builders. So those four people kind of make up the primary team for any insurance work. Now, there's also a secondary group of players that you can see in any insurance work. You've got a public adjuster, you've also got a consumer advocate, and then if you're switching from existing company, existing bank and mortgage to the new mortgage, they can all play a role. So pretty much it came down to about 7 different people that you would always see in any insurance work, and those are the players and how they work. Now, let's talk about some key terms. Now, if you're brand new to insurance, a lot of these are going to be new. If you're an old hat, then this will be simple and overview. Again, we're going to talk about RCV, replacement cost value. That was if you are to replace the property to what it was today. So today's cost to replace similar or like kind. There's a new term called depreciation. Depreciation you see in multiple different industries. Specifically in insurance, we're talking about the loss of value over time. Now, this is an arbitrary value that's set by the adjuster, and I'm going to point that out because that becomes very relevant in a couple of slides when you're talking about calculating some different values. The deductible. Now, this is a flat fee typically set in your policy, withheld from the payout. Everybody kind of knows what a deductible is if you've gone through insurance before. And then most relevant is the actual cash value, the funds available for construction prior to completion. Now, I've highlighted the word prior because we'll find out that they have relevance when you're dealing with the RCV and the ACV are tied, and that becomes in play. Reimbursable expenses, those are expenses that have been paid out, are spent, document, and reimbursed at the discretion of the insurance carrier. So those are our terms. A quick math example, if we were dealing this with a property, if the RCV was calculated at $750,000 and there's a depreciation value of 30 years and they arbitrarily calculate that in 24%, that $180,000 gets deducted from the RCV minus the cash deductible that's on the policy, $1,000, $5,000, $2,000, whatever it may be, $10,000. And you're given an actual cash value. Now, this is the money that's available to the homeowner and the builder to construct the property prior to the final completion and prior to the reimbursement. So let's take a look at that. There's 2 types of insurance claims specifically, and this is what I found very interesting. You really need to understand which kind of insurance claims you're dealing with. Are you dealing with, there's the 4 different relevance. So either the insurance company stays involved and is directly handing out the money to the homeowner and to the bank and to the builder, or the insurance company is not involved and they've gone ahead and they're just going to hand off it. So let's go back to the first one. Insurance company stays involved in the rebuild. That means that the project is under the full replacement coverage and the claim is under the policy limit. So again, they're still interested, they're still staying involved. The insurance adjuster is involved in each claim following this along. Now, if on the right-hand side, they've elected the ACV, the actual cash value payout, that means that the claim has exceeded the policy limits. And that is the case in a lot of the properties that are affected in the Marshall Fire burn. So there was a report done by the Department of Insurance, and they said that as much as 93% of the Marshall Fire loss could be where the claim exceeds the policy limits. So that's why that one's very interested. But this was something that as I further down and reviewed the insurance claim, it splits off into 2 branches. So we're going to review the one on the left first and then go to the one on the right. Step 1, determining your actual cash value. So again, much like we did before, RCV minus depreciation, minus deductible, minus an existing mortgage if applicable, gives you your ACV, your actual cash value. Now, again, the ACV is the only insurance money that's available to construction prior to completion. I was also found it very interesting that the software most prominently used in all of these insurance work was a product called Xactimate. And if you're working with a contractor and you're getting insurance work done, make sure they understand Xactimate. I've understood it's a little bit of a bear to work with, but they have very strict and rigid processes, and you'll find everybody in the insurance world should be familiar with Xactimate. That's a good qualifier. If you're working with a contractor and he doesn't know Xactimate in insurance, you can know that's maybe not his first time or is his first time, and you need to be wary of that situation. There are some items that can be added to your ACV, right? So there are secondary insurance items that are available and they all have limits, but the two most common secondary or sub policies, which can be added to your ACV, specifically are demo and debris removal. So basically taking away the existing property, removing that property off your property and then prepping it for new construction. And then what's called ordinance and law. Now, these are the mandatory code upgrades. Here's a good example. If your house was built in an earlier generation and they didn't have certain requirements for fire, life safety, sprinklers, all of those things, and you can't build that same property in today's code requirements, they'll go ahead and make you upload those codes and upload those codes. That's part of the insurance costs. And you can add ordinance and law to your code upgrades to increase the cash that's available to you from the insurance claim. Insulation upgrades are another one. You're getting a higher R value. A lot of municipalities demand a higher R value out of their codes. They continue to improve them as we improve energy efficiency. So you'll see that be something as well. Step 2, good question. Who's managing the actual draw distribution? Who's got their hands on the funds? So it can come from an insurance adjuster. Normally, if the insurance is still involved at this point, it's going to come through the insurance adjuster, and they're going to be the ones checking on the work and distributing the funds directly. It could go through the mortgage banker and directly down to the homeowner. If you have a consumer advocate, third-party escrow. The key is whatever process you're in, be very, very clear about understanding the draw schedule and the paperwork and approval needs prior to getting involved. One of the biggest issues that we ran into over the 40 plus people that I reviewed was not understanding the paperwork and the draw distribution schedule. And the project was held up because the contractor said, listen, I'm not showing up unless you get paid. I need this, I need this, I need this. And in today's day and age, when it comes to cash flow is key to keeping a project on track. And especially when you're dealing with a loss, you want to get that family back into their home. So that was terribly important. Step 3, plans, prep, and start before payment. Now, most of the builders I spoke to told me to expect a significant delay before that first payment. So what they said was they would go ahead and they would have a long time between when they started the project and when they got the initial draw. Now, this varies, and I'm going to show this in the next slide or two, over the traditional model of getting a deposit and then putting it back. But I just want everybody on the presentation to understand that this is a different model than what they're typical to. So this does also feed into the idea that builders who don't understand insurance work will go in and expect a payment, expect to get paid every 2 weeks, expect to get paid once a month, whatever the case is. They're not in control. The homeowner is not in control of that cash. So again, it's key to have a cash flow model and cash flow laid out. Step number 4, continuing the build. The build goes as usual. Contractors do what contractors do best. Builders do what they do best. And depending on the draw schedule, there can be a large deposit made of a large value of the project being deposited. And some of the contractors I spoke to, some of the builders I spoke to said as little as 50% of the work was complete, but they had 60 to 75% of the earned value of the construction draw. So they're flush with cash. And it's basically comes down to the idea that the insurance company and the people handling the money are not terribly good at the distribution and the draw schedule. That's not their primary job. They want the project to move on as well. So a lot of the contractors told me, and they said, hey, you get a lot of money up front and you get about 50% of the job done. He said, but don't get greedy and don't get stupid, because those are the only funds you're going to get until you've actually finished the project, like literally like they're in the house kind of thing. So we're going to talk about that in a second. Step 5, complete the build. So at this point, you've gotten the initial 60 to 75% of the cash. You're moving forward. You've closed the job. This is where you've released 95 to 98% completion, and you have to go back and there's change orders, there's modifications. So you've done all of the ACV, the actual cash value. 100% of the ACV has been released. This is where it gets interesting. Okay. This is where the owner submits for this depreciation holdback. Remember we talked about depreciation, right? The value that was taken off due to the age of the house. The depreciation holdback is now available if they're given replacement value coverage, where they can actually go in and document the funds that have been spent, invoices and receipts. And it's at the discretion of the insurance agency to go ahead and issue the reimbursement. Now, the builders and insurance agents I spoke to said this is absolutely the hardest part, right? it's arbitrary, which means only after the funds have been spent. So somebody's putting this money up, they're spending it to get to the completion line and getting the job done. Then they're submitting them for reimbursement, and it's at the discretion of the insurance agency to do that. It's also the largest problem that we found because of upgrades, modifications that were not in original structure. So as you can imagine, somebody's been in a home for a long time and they want to change the kitchen layout, they want to change the master bathroom, they want to add something, they want to change something. That became the biggest problem for people who are under this RCV package, because they're only allowed and only really endorsed to put it back exactly like it was. Homeowner doesn't want it like it was, they want to upgrade. That becomes a point of frustration and a point of confrontation in the group. Reimbursement, depreciation, rollback, off the record. If you have RCV coverage, which means full replacement coverage, the insurance company is on the hook to go ahead and get you back to full coverage. And they have told that they can actually exceed their policy limits. Now, what other insight that I didn't put on this slide? Hurricane Andrew is really the cause of the change of the insurance world. So before Hurricane Andrew, which I believe is 1993, 94, maybe 95, don't quote me, early 90s is basically where everything changed. They realized that insurance companies providing full replacement coverage was not fiscally responsible, and they weren't able to make to stay in the black. So a couple of big hurricanes came through, insurance companies got kind of shaken, and all of a sudden they said, okay, we're going to put policy limits. We're not just going to replace whatever the cost, we're going to put policy limits. And what you're finding is that you have a significant drop in the number of people who have full replacement coverage no matter the cost. It's still available, it costs a premium, but very few people actually elect to do it. And like I said, I think the quantity that we have in the Marshall Fire for full replacement coverage was less than 10% of the people had that coverage. So everyone else had a policy limit. When it's reached, it's addressed. And we're going to talk about that with disaster in just a second. So I want to show and set the framework, because a traditional builder's cash flow looks something like this. The blue line is their earned value, the red line is their costs, and the rectangles are the tranches of payment or the draw schedule. So what you'll find is that most people don't understand that projects are actually spent in an S curve. They're not a straight line. They're actually start out slow, demolition, foundation, concrete, gutter, all that's very slow. And then around, the 75% of the job, it really ramps up to a peak. That's when you've got your tile, you've got your finished floors, you've got your countertops, you've got your glass doors, you've got all the expensive stuff that needs to get paid for instantly, fixtures, finishes, that kind of things. And that's where and then it peaks out, and then you kind of teeter off and make that work. So as a contractor, as a builder, most of the builders I know try to keep the earned value high enough so that the draws cover their cost. Otherwise, they're becoming the bank for the project. They really want the homeowner and the person they're working with to cover those costs so that they can go ahead and keep moving forward and keep their costs under their thing, which they've done, except for this one section right there. You see right there where they kind of let it sneak out for a second. So going forward, talking about insurance work, what do we say? You said you have a desert of time over here where there's no draw, no schedule at all. You get a large chunk of money. You then get a second large chunk of money. And then look at this. You're dealing with a situation where now here we are in the desert where there's no money, where they have to finish the project and they have to keep moving forward. I hypothesize that this is really the danger zone, because you're dealing with a situation where these builders who are typically keeping all of their costs under their draw schedule have now gone ahead and they've gotten large chunks of money up front. They've gone ahead and moved forward. Now all of a sudden they're in this danger zone where you can see they don't have the money. They're actually upside down per se in the project. They're fronting money for the project. If you have a couple of these that are coinciding together, you can be in great danger, because if you don't know your cash flow as a builder, this gets you in a lot of trouble. Understanding this moving forward and getting into a project can save you. I'm speaking now to the homeowners. If you understand this, you can also plan ahead and have conversations to prevent this type of situation, and have transparency and clarity with your builder so you understand that's an issue. I already talked about Hurricane Andrew. I didn't realize I had that in there. Replacement coverage available is high. It's available premium. And then talk to your insurance providers. One of the things we recommend as an action step is really to walk through the insurance provider, whoever your insurance provider is, ask them all the likely and unlikely scenarios. Just play devil's advocate and say, hey, tree falls on my house. What's covered? What am I doing? What's going on? They'll be happy to play that conversation with you. They'll be happy to really understand it. Ask all the conversations and really know 1,000% what's covered, what's not. Because again, as Helmut, my buddy, likes to say, insurance is nothing more than a contract. There's an ask, they're asking money from you. There's a give, they're offering this. You need to know what that is. Now, let's talk about when the insurance company is not involved, which is the majority of the work that's happening over in the Metro Denver and Marshall Fire situation. So the options are they've elected the ACV payout, which means that the claim exceeds the policy limits. The other thing that's very important here, and the note down at the bottom, which means a catastrophic declaration, which means they are expediting the limits. Now, I wasn't ever able to clarify who does the catastrophic declaration. It's usually made on a state level, but I do understand that it's a certain volume. I don't know what triggers it. There's a certain volume of catastrophe, a certain volume of damage, and at that point, it's declared catastrophic. And at that point, the state comes in and says, nope, catastrophic. And at that point, all the insurance companies are really kind of mandated and told to flush as much of the payment out as fastly as possible. So you're finding a lot of people that are getting full limit policy payments, and they're getting a lot of money, and that's unusual. Then they want to go ahead and they want to get in line. They want to find a builder. They want to get started again. So it's very interesting to see, but just be aware that the catastrophic declaration then triggers a new event from the insurance company, and they expedited limits payout from the insurance company. So maximum value of policy limits, you can negotiate for the highest value. You need to pay attention to your sub and secondary policies to drive as much value as you can to get as much cash out of your payment as you can. And this is usually a one-time payment with dual signature. So it will go to the mortgage holder. They'll take out any remaining mortgage and it may stay there. Again, it talks, given the bank and given the conversation, that's how it does. But it's basically dual because you have to take care of the lien holders that are on the property first. That's usually the mortgage company and then the homeowner moving forward. So summary takeaway is really that communication is absolutely key. Don't walk into any project with assumptions. So if you have an assumption and the builder has an assumption, the insurance company and the bank are all have assumptions, get them all out in plain transparency. You're all traveling together, so really make a plan. You know, kind of like a roadmap. Hey, we're starting here. We're gonna have a draw payment here. We're gonna finish. We're gonna be this far along. We're gonna have a draw schedule here. Don't make any assumptions. Really, if you're traveling together, make a plan. And I talk a lot about the project triangle. That's really the iron triangle of projects. It involves scope, time, and budget. And a lot of people don't understand cash flow is just as important as all three of those, but it's really a combination of budget and time. If you take the budget and the schedule and bash it together, you get your cash flow, and that's how you can really take it away. So that's it. Thank you. My name is Jake Harris. If you have follow-up questions or emails, jharris@buildwallet.com, and I am pleased to give you this presentation this evening.
All right, guys, I don't see any questions in the chat. Are there any questions right now? Anyone like to chime in? Either turn your mute off or type it into the chat there.
There's a fire hose of insurance information for everyone, right?
How do you handle the taxes on that? On the insurance money?
That's a good question. I didn't get into the tax ramifications because I imagine it would be different for everybody, depending on if it's your home property versus an investment property. I'm not being a CPA. I don't know if I'm qualified to give any advice on that.
Do you know if it's counted as income?
Again, I don't.
Okay.
I know that I don't.
Yeah.
Sorry.
Second question. What about an umbrella policy?
So in what capacity?
If you have the main policy for your home coverage. We have an umbrella policy above that.
Okay.
Which covers additional costs. And I'm wondering if those are used in catastrophic events like this.
So umbrella policies are secondary policies to basically, I mean, just like they're intended and say, basically cover those things that are not covered specifically in other areas. So I don't know the ramifications of the triggers, the insurance for an umbrella policy. If are you asking if you max out your limits, does the umbrella policy kick in and cover the rest?
Yes.
The challenge to that, answering that question, is that the insurance companies that I talked to all said that this magical phrase, which is "it depends."
Okay.
And I swear everybody said the same bloody thing. So not to be frustrating here, because we want to give you good information, but again, I find myself defaulting to that term because without, not knowing all the different nuances and all the different things. But I think that's a great question where I would go and play a worst case scenario bingo game with your insurance agent and say, hey, if I have this and this happens, does this kick in, right? Those are all the different kind of questions you're going to want to ask your specific agent, because there's riders, there's catastrophic events, there's acts of God, there's all kinds of things that get pulled in and out of insurance. And for better or worse, I feel like sometimes, insurance, the favorite word is no, right? And so you want to find those areas that are a yes, because that's really what you want to do. And you want to cover yourself to make sure that you understand your coverage and you understand what that coverage does for you.
Yeah.
So not trying to dodge the question. Does that give you some clarity and maybe point you in the right direction of somebody who can answer that?
You can get good information or no information, and that's all you can get.
Yeah, but I mean,
No
everyone
problem.
they're all required to answer your questions, right? I mean, that's really their job, and to understand those questions. And they're always willing to sell you an upgrade or a policy or an additional thing. So what I like about the way Helmet prescribes it now, if anybody's interested, we're holding a follow-up session on Wednesday. So Casey's going tomorrow, and he's going to give us basically the banking side of that conversation and really talking about that. Mine was more the insurance work, but we have a follow-up on Wednesday that I'd highly recommend you specifically come back for, where we can hear about Helmet, and he's going to talk about builder's risk. And if you want to talk about somebody who has forgotten more about insurance than I think I'll ever know, that's the guy. Like he's a really good expert, and he'll be a great resource as well. So if you have time, Wednesday, same time, same place, that would be a great place to ask questions like that. And if he doesn't have the answer, I'm sure he'd be willing to take it offline and help you out as best we can, because the NHB and the HBAs are all about answering questions and trying to get you what you need.
Very good. Thank you.
Absolutely. Any other questions about cash flow? I mean, we can kind of hit it all, but again, it's just nobody really understood the insurance side of this and understanding how insurance works. And so the breakdown and the final analysis is sometime the insurance companies stay involved, in which case they're going to monitor it very closely, and there's going to be a cash flow crunch, and really you have to watch it closely. And sometimes they're going to issue a one-time check and be out of the picture altogether. So understanding which one of those two models you're looking at will really help you understand how you can proceed and move forward. And catastrophic really changed the game when it came to the distribution of funds for the Marshall Fire catastrophe. So. Do we miss anything in the, Casey, you and I both have our communication information in the chat. So you can reach either myself, Jay Harris at Bill Wallet, and Casey is Casey Bushnell at First Bank, and we have our phone numbers there. So please grab those and move that forward. And what else do we have?
There's
All right.
No other questions, and we can probably wrap it up here soon, but anyone else have anything before we end the session?
I see two.
I have a question if you
comments.
can hear me. Can you hear me?
Yes.
Yes.
Do you happen to know, I don't know if this is the right form, but we're trying to understand what level insurance you have to keep going forward once you've lost a house in a total disaster. I can't seem to get a straight answer on that. I don't know why. It seems like somebody should know. Our insurance agent does not.
I wish I could say insurance got black and white, but I think they like to live in the gray a little bit. No offense to any insurance agents on the line. But that's the truth. And kind of like we said in the beginning of this context, we're just trying to provide a vanilla level concept, understanding anybody may do it a little bit differently. So let's talk about insurance just for a brief second, because you're dealing with different types. You have a homeowner's policy, right, which is an occupied house with no construction going on. And you have that context. Then you have a construction operation, which is a combination of builder's risk, general liability from the builder's risk from either the homeowner or the builder. And that's really taking the property from something and moving it to something else. And then you have another policy, which is when you get into an occupied house, which is back into homeowner's policy. So really the answer to your question raises another question, which is what kind of insurance do I need? It depends on what stage the project and the property is in. If it's occupied with no construction, that's a homeowner's policy. If it's active construction or being built, then you're talking builder's risk and a builder's general liability policy. And then once it moves back into being an occupied house, you're back into a homeowner's insurance policy. Does that help?
Yeah, I understand that at a high level, but the mortgage company requires you to have a level of insurance. And, our insurance company renewed us at a higher replacement value and higher contents value, which I think is a complete joke since there's no house. But we have to fulfill the need for the insurance for the mortgage. So I wonder if I go back to the mortgage company then and ask them what kind of insurance I need for the mortgage then. If it's just land, for release liability of the land.
So yes, I think now, I think anybody will sell insurance, right? So that one of those things. So, but I think it's counterintuitive to get into a situation where you have homeowners insurance and material, occupant and material insurance for a property that doesn't exist, right? I think
that's what I've said to them.
Well, and then the question is this an entry level person just checking a box, or is this somebody who's actually having a conversation? So if you have time, put it on your schedule to be back on Wednesday and bring that question up to Helmut.
Will there be a recording of that or something? Because we have a conflict. There's the Marshall Fire. There's a Boulder County meeting that same night, same time.
Okay. Yes, there will be a recording. It will be published. And if you take down my name and information, I can get you Helmut's information because he'll be answering those questions, those specific kinds of questions. So if you want to send me here's a great offer. If you send me the specific question that you want answered, I will get it answered on the recording, and then you can get a copy of it as well.
That's amazing. Thank you. Sorry that we have that Boulder County meeting at the same time.
Not at all. Not at all. Again, the HBA is here. We want to answer questions. And again, it's not just for the builders, it's for the homeowners as well. We all want to speak the same language, which allows us to get, eliminate confusion, get cohesion on a project and a plan, and then move forward and get everybody back in their house. There's what is it? Just under 1,100 homes that were affected and destroyed. So that's a lot of building, especially for a group and in such a tight knit area. So we're really trying to do whatever we can to all play ball and all play team here. So that's why we're doing these.
Thank you.
All right, so I'm assuming that's the question that we had. Do you know what insurance we need to keep on the home that we had the fire lost? Okay, got it. Anything else? Open forum. Any other questions, concerns?
This is Jim. I could share my experience on that last question. So we went down to renter's insurance and then our mortgage company, of course, said, you can't do that. You have to have some sort of homeowners. And we described to them the situation. And we were with United Wholesale Mortgage, a big national chain. And I think you're exactly right, Jake. They have people there that check boxes. And if the box isn't available, they don't know what to do. We actually got a situation where they automatically charged us for $18,000 a year policy of insurance and drew it out of my bank account. I was about ready to sue them, but I finally got resolution. I had to provide documentation from the deconstruction folks, the debris removal folks, that it was completely done, that the permit, the deconstruction permit was satisfied. And finally, after 6 months of fighting, I got that resolved. So I'm not sure it's worth it. If you could go down to maybe the lowest possible limits, it might be worth it in that case. Or if you have a mortgage provider that is easier to work with. But in my case, we finally got it resolved. We have renter's insurance right now. And like Jake said, we're gonna, obviously get the construction insurance once that starts to build, once we start building.
Thank you, Jim, for the real life example that helps out and shares real life situation. Thank you.
All right, everyone, are there any other questions? Nothing. Well, Jake, thank you for the presentation, and thank everyone else for showing up. As I mentioned, the session has been recorded, and all the sessions this week will be recorded, and they're going to be available on the HBA website at hbadenver.com. And you can see there's a banner up at the top right-hand corner. It says Marshall Fire Education Series videos. You'll be able to find all of those there. And like Jake mentioned, feel free to reach out to us with any individual questions. If I don't have the answer, of course, I can always try and help point you in the right direction or find that person for you. So again, thank you, everyone, and have a great night.
So Casey's being modest. He and I are co-chairs of the finance and insurance task force. And I'm really going to plug the other 3 events. And I know we're kind of stacking them back to back. So to your point, that may be difficult to do, but we really wanted to have some harder hitting content in this next group. So today was Insurance Cash Flow Insights. Tomorrow is Banking Insights with Casey. He does going an amazing job. Wednesday is the Builder's Risk expert that we're bringing in. Again, he's forgotten more about builder's risk insurance than I'll ever know. So that's a great place to be. And then Thursday, really excited, we're going to have a finance roundtable and really open up some questions regarding banking, regarding finance, regarding options when it comes to this Marshall Fire disaster. So again, putting a plug in. I know everybody's time is very valuable. If you can't meet them or can't find us on the time to do it, please check out the videos. We're really trying to provide some really good content and drive up the value. And if you have specific questions, reach out to myself, reach out to Casey. Again, we will do everything we can to help everybody on the team. Thank you all. Have a great night.